I have sold all my Fiverr stocks. In this video, I will share with you why I've done it, what I've bought, and also a dip analysis about Fiverr as of today. Hello, welcome back to Family Investment. I'm also known as Mr. Fiverr on YouTube because I'm one of the first, in fact, I am the first person who spoke about Fiverr going to the millions. And since then, $25 and Fiverr has gone more than 10x. So why did you sell Fiverr, Alex? I thought this was a long-term hold. So before I begin explaining myself, I just want to say my thesis on Fiverr's long-term goal, the roadmap for them hitting 15 to 20 billion CAD in the short term of the next 2 to 3 years, it's still intact. The business has not changed. The fundamentals, the growth has not changed. So this is not driven by any news that could shock existing Fiverr. But today I want to explain to you why. There's 3 real reasons why I have sold Fiverr. So the first real reason is me wanting to transfer more risk. I need to take higher risk. When I started thinking back that, Alex, you want to retire by 2025 and the amount of risk taken in my portfolio is not enough. To want to hit that $1.5–2 million mark is not enough at the current stage. So therefore, I wanted to take a deeper risk. And the second reason is because I'm low on capital as well. I've gone all in since February, March, April, buy on the dip, buy on the dip, buy on the dip. I did. I bought in every single dip. I went in and it's worthwhile. Now in June, I look back and I thought, glad I did it because all these stocks have just rocketed up. They have recovered and then it's still a long way to go. But I'm low on capital and I needed to move away to get this really high risk asset. And the third reason is because I think at where we are on Fiverr, there's a 2 to 2.5 to 3x. But I needed something more. I needed something on a 5 to 10x element to push me higher, to gain me that vision in 2025 and beyond, of course. So therefore, I have moved. You all must be wondering, so what did I buy? What is this 5x, 10x? Okay, let me tell you straight to the point. I've sold all my Fiverr stocks and I've bought a lot of Ethereum. Yes, I've gone cryptocurrency. Ethereum, because I think Ethereum has got potential of 5x in the short term within the next 2 to 3 years and 10x in the long term up to 10 years. So I see a long vision of Ethereum and its application. But in this video today, I'm not speaking about Ethereum. It's focused on Fiverr itself. If you want to check out my thesis on why I think Ethereum is the next 5x to 10x stock, please, again, I've moved to a new crypto channel. No more family investment talking about crypto as I announced previously. You'll go on a brand new channel which I've started and soon be posting videos. So on the link below, you see FYI blockchain. Temporary name, it will change, but go there if you want to find more about Ethereum, why I think you go 5x to 10x. Fiverr is still on my radar. And now in the next step here, I want to speak about Fiverr. I'm going to speak about the fundamentals, technical analysis, valuation, my buy trigger mostly, just for you existing Fiverr shareholders or thinking about buying Fiverr to help you make the decision. Before I go into the deep analysis on Fiverr, I just want to remind all the users, please remember to click like and subscribe to see, hopefully to you to come back to see more videos like this. And also this video today, I want to give a shout out to hypercharts.co. Yes, Hypercharts is the one I technically use every single day on my analysis. I want to use it for this analysis here today. Again, back to the Hypercharts. This is the part where made me change my mind. It's a 36x stock. Okay, 36x multiple. So what does it really mean? But if you scroll down further, you look, the growth is still over 100%. I mean, look out there. Where can you find a stock that's on a high growth 100% and a quarterly earnings that goes up in a straight line? What does this remind you of? Subscriber base. And what does it remind you of? Netflix. It's one of those Netflix type stock which still could grow. Okay, it relies on subscribers and the marketing is helping with Fiverr. All the expenses, as you can see there, the high expenses is due to what? It's due to marketing. The platform itself, the technology itself is booming. It's working so well that every other freelance stock like Upwork and any other ones that you name are not at edge with Fiverr. On the Fiverr investor relation, they've been saying smaller businesses are using freelance economy now. They're not hiring marketing agency. They're not hiring any special agency to do work for them. They can actually go and find specific work to reduce their cost. So 45% of business to small, medium are using the likes of freelance, i.e. Fiverr. For 2020 in US and the global on Fiverr have made up to $2 billion. So as you can see, this is a market that's growing. People are happy working from home. People realize they have skills that can work from their desk here, which I've stipulated months and years ago that Fiverr will be growing. And this is the proof that the fundamental roadmap has not changed. So now I want to speak about the valuation of Fiverr. Fiverr is sitting about $8 billion company just now, okay? And I still think there's a $15 billion to $20 billion focus in the short-term run. When I say short-term, 2023, 2024. And for this year, I expect Fiverr to hit the 0.4 EPS overall for 4 quarters, and they are on target. With my Graham's intrinsic valuation method, which you can find on my website, free calculator to use here, for 0.4 EPS and 80% growth. Okay, I'm being a bit conservative, 80% growth. Fiverr, if you put in a calculator, it booms up to be $84 per share. Yep, $84 per share. We have to be realistic. But let's boost it up a bit further. Let's be a bit more optimistic, okay? This year, 0.4, but 100% growth, like what we see, exceed expectation. It will come out as $104 per share. That's what Fiverr should be with a lower multiple count. You're asking, Alex, but why are people paying for $260? There's a genuine reason for it. Let's dig in deeper, okay? So assume further down the line, Fiverr should be making about 1 EPS. Who knows, it'll be 2023 or 2024. They're breaking ground, they're making money, they're generating great profit now. 80% growth, it comes out to $211 per share, okay? Or how about if 100% growth? If you put it in, this is 1 EPS, 100% growth, they should come out $262 per share. Does it sound familiar? The range between 211 and 262? So it means that people are paying high multiple future value for 2023, 2024. Not far away, 18 to 24 months. You're actually paying for the 18 to 24 months valuation of Fiverr, expecting to hit record revenue, record growth. And that's what you're paying for. And this is what the 36.3x multiple actually means. You're paying forecast future value for the next 18 to 24 months. And this is where I stand. This is where I feel that 36.3x is already at its peak just now. And I would like to move it to Ethereum because I think Ethereum's got a longer way to run. Okay, now let's go to some technical charting and also Fibonacci to pull up our buy trigger. What would you buy at what price? Okay, look at this Yahoo Finance chart here. As you see, you train on the candlestick trend, it shows 2 white soldier, potentially 3 white soldier. So it's on a trend of a breakout. Yes, on a breakout to go higher. How high? Yes, there's always a limit. It can't just go up forever. There's a limit how you go, and I think it's 241. What makes you so confident it's 241, Alex? It's because I use Fibonacci retracement chart. So now it's on a breakout, it's heading upwards, and if you see another third white soldier in the next week or 2 weeks, it should be hitting the $241 mark. Okay, that's where it should be hitting. So I've sold out, it doesn't really matter, but for you guys, you should know this. So it goes up higher. What happens after that? We don't know. It depends on the fundamental reason, it depends on market condition, it depends on inflation, it depends on any new information that we don't know that people are buying off Fiverr. Who knows? Fiverr might be hiding something that's not announcing to us. Maybe it's a new merger. We don't know. But it needs a bigger news to break beyond 241. But what are the buy triggers, Alex? Okay. So the buy trigger, I call it the buy trigger zone. I'm not going to give a specific amount, but it's buy trigger zone. So at my buy trigger zone, the first one will be 189 to 251 because that is the zone where the gaps have been filled. And if it does go down for a reason about value rotation and all this nonsense that the market creeps up a bit about, Fiverr should dip. If it dips at that zone, then that should be the buy zone. But if it goes in deeper with high inflation and high yield curve and all that nonsense that keep coming up, because remember, the next earnings is still a couple months away. So earnings would drive price up, but if no earnings, it's all about news and noise in the market. And it still could go down to $156 to $189 per share. That's a gap that has been filled before, it could still come down. So that's where it is. But I want to explain the risk to investor. Remember, you're paying for hyper-growth stock, you're paying for future valuation. It doesn't mean that it's going to always go up in a straight line, but it still would also come back down. See the chart below, which I said gaps to fill, okay? If you see on a technical chart, you see gaps to fill because when the stock goes up too high, there's still gaps they should fill. The blue zone, it looks like a technical zone, but I think it wouldn't go down that low below $100 per share. Because remember, my valuation, I calculate they should be worth between $80 to $120 stock. So the gaps to fill is that $100 to $150. So the zone is the gaps to fill. So potentially this could drop deeper. But when they drop deeper, what they normally do is they bounce up because fundamentally it's a strong company. So don't be shocked when you see it drop so deep that you sell the stock, because technically you should just be holding or buying on the dip if you're a long-term Fiverr investor. Stocks will have its risk. So this is me on Fiverr. Join me on my other channel if you want to hear why I'm so bullish about Ethereum. But in this family investment, no more cryptos, but I want to focus on stocks, buy trigger, the analysis for you guys to help you make the decision. Because at the end of the day, we live in 2021. It's beautiful. Why? We can take command, we can take control of our own fate or what to buy and sell. We don't really need to rely on some bankers or some investor advisor to tell us what to buy, because they don't even know what they're buying anyway. So it's good that we can make our own decision. So well done if you are a stock investor and you're making decision for yourself. So thank you very much. Hope you like, subscribe, and see you in future videos like this. And so I
hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos. Bye!